Hello, this is Jerry Davison, and in this video I explain the rules that define whether a company and individual employees are eligible for EMI. So first, what companies qualify for EMI? A key rule is that the company or the group must have fewer than 250 employees. This actually applies only at the date when the options are granted, so it doesn't mean that you always have to stay under 250. Secondly, most business trading activities are eligible, but certain types are excluded. For example, banking, insurance, leasing or other financial activities, receiving royalties or other license fees unless you own the intellectual property, property development, farming and forestry, and operating or managing hotels or nursing and care homes. Third, and this is an issue that catches out quite a few businesses, the company must be independent and not under the control of any other company. Therefore, if you have a group of companies, you cannot use shares in a subsidiary for EMI options because the shares must be in the parent company. However, the parent company can offer EMI options to employees in all its subsidiaries, so long as they're all what we call qualifying subsidiaries. Broadly, this means that the top company must own more than 50% of the share capital and fully control every subsidiary. If your company has a shareholding in another company, but where it's 50% or less, it can get complicated. For example, in the case of joint ventures, where two companies own 50% of a third company and each have effective control over it. If one of the owners is an EMI company, this situation could be a disqualifier. In terms of location, there's no requirement that your company is resident or incorporated in the UK, but it must have what's known as a permanent establishment in the UK, such as an office. And finally, the gross assets of the company or group must not exceed £30 million. Gross assets means the value of only the assets in your balance sheet, so you ignore liabilities such as creditors. So second, which employees qualify? Essentially, employees must commit to work for the company for at least 25 hours a week, or for at least 75% of their total paid working time, and this includes time spent in self-employed work. Also, they can't have more than 30% of the shares of the company, but not including the option shares. So it's 30% before any options. If a company or a person is simply not eligible for EMI, other types of share schemes may be used. For example, company share ownership plan or CSOP, or an unapproved scheme, for example, for non-executives and non-employees, or a growth share plan. None of these is quite as good as an EMI in tax terms, but they still enable an equity stake in the company. Thanks.